Hi traders, and welcome to the technical analysis market wrap on Friday the 21st of January. So we've certainly seen some big moves in the key indices later this week, and far out we've got some good moves on the dollar index and some of the US dollar based pairs starting to look like they're about to happen too. So let's jump straight into the charts and see if we can identify any trades for today and early into next week. All right, we'll start out here with the Aussie USD. You can see we had a big move up in the previous session, and it effectively tried to test that high again at around that 90, at 72, sort of 90 and 80 area. This is the second time that it's failed, so it's starting to certainly look a little bit ominous around this level that, yeah, we're getting a little bit of a flatlining of the MACD. As you can see here, the MACD histogram is effectively flatlining. Moving averages are starting to really get close together now, the 20 and the 50. But the most important thing is that the price is failing to break up through there. So we know that we're starting to get a little bit of dollar strength again. We'll look at the dollar index shortly, but yeah, that's going to play havoc on a couple of these pairs, this and the euro included. And look, it certainly had a crack last night and has pulled back quite significantly. Now, although it's not a shooting star at the level where you would have expected it, because, obviously above the 72.90 would have been ideal to see a big wick reject from that level. The fact that it's actually reaching there and rejecting off it and coming back into the moving averages tells me that, we are looking at potential weakness here, and there's certainly the bulls are having a great deal of difficulty pushing this up and holding it up there. So realistically, I'm looking for a weakening of the Aussie USD for starters. What we're going to do though, we're going to go to the smaller time frames to try and isolate the trade. You can see here we've effectively got that is an evening star. There's no worries about that on the 4 hour. Again, if it was a little bit higher, I probably would have been a little bit happier because it would have been a very solid resistance. But in saying that, if we draw a line through here, you're going to see that it was very strong resistance anyway. So it's probably at the right place. If we get a little bit of a breakdown below these moving averages on the 4 hour, that would probably be convincing me enough to push it down to the lower time frames. And look, the next point of call probably will be around that 71.50 area in the first instance, and then down onto the 71 and 70.50. But in the initial trade, I'd be looking for that 71.50, probably an entry point. We're looking for a lightning bolt for sure. So we've got the 4 hour going on with the pattern, but then we'd go to a 1 hour time frame to look for a lightning bolt. So if we get a lightning bolt on the way down, so a series of lower highs and lower lows, that would be good enough to probably enter this trade and give us a conviction that momentum's on our side, and we'd be looking for a downward move to around that 71.50. So pretty good trading on this one. Failing that, of course, if it looks like it starts to push up again and we get a daily close above the 72.90, then we change our minds and actually start looking for long positions again and maybe push it up to around that 74. But it's got a bit of work to do before it does that. We want to see a daily close above 72.90. Without that, I wouldn't even be thinking about going along on this one, because we need conviction now because it has failed a couple of times. So they're the short and the long options on the Aussie. Both of them are sound, but you just have to wait for the price action to play the game. All right, we'll move over to the US dollar CAD now. Look, this one's an interesting one as well. It's found the support exactly where we thought it would, which is no surprises there. It's found it on the 200 moving average, but that also coincides with that really important level around the 125. Now we'll pop a horizontal line there so we can see it and keep it there for next week, just in case it does move away from it. But you can see the 200 moving average is a very, very solid benchmark here. The pattern has all but played out on the head and shoulders, so there's no worries there. It's reached at least the 80% mark that we would be looking for on that trade anyway. So realistically, it's done and dusted in that regard, knowing that we're probably going to have some dollar strength on our side in the most recent price movements. I'm probably looking for longs off this level. Look, if it fails to actually break up and still continues lower, what we're looking for is a daily close on this here. This is a daily. Let me zoom it in for you a little bit. You can see that we've got a week of effectively wick action. It's tried to sell off. It's pulled up every single time above the 200, which is always a good sign that it's finding the support that it needs to here. A daily close for me would need to be below this level here. Okay, so we want to be seeing a daily close below the 124.40 area. If we get that, then we can start looking to the next support level, which is around that 123. So if we get a daily close below this level here, we can start aiming for the 123.20 area. But if we start to see that any form of lightning bolt strong on the 1 hour or the 4 hour from this level here, we'd be looking for long opportunities back into the neckline of that, which is around that 126 30 area. So we would be looking for a 1 hour chart. You can see here, this is the congestion zone. We want to see a series of higher highs and higher lows on a 1 hour. That would give us a lightning bolt that we want. And if we get that, then we will look for those long opportunities to the neckline there. So two ways to play it, and both of them again very sound. I'm not really biased either way on these ones at the moment, because I think both of them provide quality opportunities if we get the right price action. So a daily close below here, or a lightning bolt on the 1 hour above, and we've got two very clear targets, okay, on the US dollar CAD. All right, let's go over to the US dollar yen now. You can see here that we've got that roll reversal zone that it's really hovering at. It's done nothing basically since we talked last week. You can see that we had that little mini rejection at this very key level around that 114. We know it's obviously a very important zone, so there's no real surprise here. It's basically attempted to break the 20 moving average, and it failed to do so. Had a reasonable move up. I mean, look, he could have scalped it. There's no question about that, but it hasn't followed through. And now it finds itself back at the exact same level effectively. So look, it's a good level in the sense that I think it opens itself up to potential longs, knowing that we've got just a little bit of bias on the dollar strength. Even though we're happy to go both ways at the moment, the dollar index is looking a little bit stronger than not. So, you know, my preference probably would be to go long on this one, seeing as it is at a roll reversal zone. If we get the lightning bolt on the smaller time frames, it's really required on this one. A daily close, for me, a daily close would have to close below 113.40 here. That would be the only thing that would really get me shorting it, because you've got this really strong support right through this level here. So in order for this to, if it's going to break down, it's going to break down all the way down to 112 again, if it's going to do it properly. So we can be a little bit patient and actually wait for a decent daily close to prove that it has actually gone down. If we do get that momentum and it closes, I mean, we've got a moving average bearing down on it as well. So we may get a moving average crossover, which would really probably help its cause. So a daily close below the 113.30 area would give us shorting opportunities down to around that 112.50 in the first instance, and then down further to around the 111 sort of 80 area. Both of them very, very strong zones for a trade. But we need a daily close below that. I wouldn't be touching anything short of a daily close below the 13.40. On the upside though, if we get a lightning bolt on probably a 4 hour or a 1 hour even off this level here, we know it's a strong roll reversal zone. We may find the support that we need to push it back up into the 115 and also and beyond. Really, we could probably get to the 116 if it really launches out here. So both, again, really good opportunities both sides, but we have to wait for the price action. At the moment, I would not trade anything on this short or long, because it's sitting right in the middle of the place where it can do both with any conviction, whatsoever, with momentum on its side, right? So wait for the momentum to kick in and let price prove itself where it wants to go, because when it does that, I think we're going to get good moves either side. So I'm not fussed which way, but ideally probably I would be a little bit happier if it was long, only because the dollar index, which we're going to have a look at next, is looking a little bit long. All right, so that's the two traps that we want to set for this one. Set your alerts for those two levels, and we should be good on the US dollar yen. All right, we'll go to the dollar index now. And again, the reason I say this one's looking a little bit strong is because obviously it's kicked up this week and we can see a fair bit of strength here. The S&P's come off. We know that. So, yeah, that's certainly helping this one's cause. It's trying to close above the moving averages again. So that's what we really want to see. A daily close above the moving averages would be very, very strong. We know that it's at a critical point, though. We've got the roll reversal zone right here. We've got very, very strong support. We're going straight into that. It could just as easily sell off this level and continue on its way down. And that's why I'm not doing either of the US dollar based pairs that we've talked about previously today with any really, really strong conviction either side, because this is still, although it's looking bullish at the moment, it's got a lot of basically resistance to contend with. Very, very close resistance in the last basically the last 2 or 3 months. You can see that. If it breaks through this zone, though, look out. If it breaks through that level here and closes above, that's what we're looking for. We want a New York close. So to close the end of the week above this level here, above the 20 moving average, it would make me happier. If it was a little bit, ideally in a perfect world, we want to clear this zone. And if we get a close above that 95.80, that would convince me that we're going to have a very, very strong week next week. And I'd be looking for longing opportunities on all of the dollar-based pairs that we talked about today. So that's what we're seeing at the moment, is basically an engulfing candle really on the daily. As you can see, the open and the close is higher and lower than the previous candle, so that whole candle fits inside it, which is a very bullish sign, obviously, but it needs to hold this. Obviously, this is a daily candle, and it doesn't mean it's going to finish this way. This is why we wait for the confirmation. If it finishes this way at the end of the week and closes even above, even stronger, very, very strong for next week. If it sells off and ends up somewhere down here, we'd be looking for the complete opposite and shorting opportunities at the start of next week, because that would be a very negative sign for it, obviously. So very key zone for it. It's going to be a very, very interesting 24 hours. All right, let's move over to the Euro USD now. Obviously, the inverse of the dollar index. Look, it's looking obviously in reverse. It's looking exactly the same way. We can see that it's under the 20 moving average now. A lot of congestion here, though. Okay, so realistically, we won't spend too much time on this one. We know what's going to happen if the dollar index goes long, and we know what's going to happen if the dollar index goes short. Basically, we're waiting for a confirmation either way. If we get a close below the 112.30 area, which is below all of this nonsense noise, if we get a close on the daily below that, we're starting to look really, really good for the 112 and 111 targets again. And of course, if it reverses and closes above these moving averages, which is what it needs to do to convince me it's going to start going longer again, we'll start pushing up to the previous highs of around that 114.80 area. So pretty easy trading on the euro, really. You're just basically waiting for that exact same signal that we've got on the dollar index, only in reverse. If one does one, the other one's going to do the other. So we know that. Okay, so it's easy just to set your alerts on both sides. And if we get a daily close at the end of that, I think we've got some really good momentum for next week, either side. So I think that's going to open up some really good trading opportunities for next week. I'm a little bit excited about next week's trading, actually, because I think we're in the right place at the end of the week for all of these to start moving in the right direction. So Monday's going to tell us a lot, but of course the New York close is going to tell us the most once we get the actual confirmation closes on these key candles. All right, the last one we'll have a look at today is the US 500. Obviously, we've got the big sell-off. There's no big surprises there. We talked about that on the webinar on Wednesday night, that we thought the weakness was definitely looking like it was more likely than not. And we've seen a pretty big sell-off now. The moving averages have crossed over, but it is finding itself at a pretty strong level. Okay, we're down to the 44.50. We've got a 200 moving average, which is obviously a very strong level to hold up. But it works both ways. If this level doesn't hold up, it provides some very, very serious problems for the S&P 500 after that, because the next real zone is around that 4,300 and 4,250. So it's got a fair bit to fall, and the moving average crossover certainly doesn't help it. So realistically, it hasn't fallen this hard and sharp in quite some time, as you can see. This has been a pretty sharp fall given the recent history of 2021. So it certainly needs to be taken notice of, but it's one of those ones where you don't want to be panicking either. There's no need to panic and rush sell positions that you might have long. What we're going to be looking for is probably a little bit of a rebound from here. If the market's behaving itself properly, what we're going to see is a rebound at this level here off the 200 moving average and this support zone, probably back up to the moving average at the very least. That would be ideal, back up to the 20 moving average. That would be a really good opportunity to get in and basically from there either continue on to the short, or if it does actually break up above the moving average and starts to reverse, what you're aiming for. My preference on this one is probably a little bit more weakness to give us better opportunities to buy a little bit lower on. I think this is starting to look a little bit tired, like we highlighted the other night. We definitely had divergence on the MACD. You can see that on the daily. It's quite big divergence, really. So there's no surprises here of what it's doing. But what it does next is going to be key, obviously. A daily close below the 200 moving average, especially if it's a decent close, could see it fall another couple of hundred points very, very easily. So, make no mistake about that. The preferred trade would be a pullback up to the 220 moving average. Not the 50 is probably going to be too far away. And at that point, we'll make a decision. We're either going to continue on with the short, which is highly likely, just because it rebounds to there. What we don't want to see for a short side sell is obviously a big V reversal that breaks through all the moving averages, because if you're going to be looking at shorting, that's not what you want to be shorting into. But a sustained move up to the 20 moving average and then more congestion around that zone would be a weak signal for this one. So that's what we're looking for, a pullback up to the 20. If it goes up above the 20 and closes, then we're going to start aiming higher again. That's not the preferred trade. But also, what I don't really want to see either is a big, another big red candle tonight that pushes past through all this support, because then that starts to lead to panic selling and it starts to take, the technical levels away a little bit. So ideally, we'll find a little bit of consolidation here, a bit of a pullback, and then we get in. If you haven't already shorted it, we can get in on a bit of a pullback to the moving average once we get a change of trend on the smaller time frame to the downside again. So good, really, really good trading opportunities. I'm very happy with this one. It's doing all the things that we wanted it to. Now it just needs to find its base, and if it does that, we're going to get some more good trading opportunities for next week. All right, everyone, thank you so much for joining us today. I hope you had a great week's trading. We had some really good opportunities, and I think we're going to get some nice trends starting next week. So keep an eye on those levels, and I look forward to seeing you all next week. Have a great weekend, everyone.